Most people who are underinsured don't realize it because they don't fully understand their home's replacement cost or what it actually costs to rebuild their home after a total loss. You look at your policy, you see a large dwelling limit, think, okay, I'm covered. Maybe it's 400,000, 600,000, or even more. And because it's a big number, it feels reassuring. But here's the uncomfortable reality. A lot of people are underinsured, and they don't find out until it's too late. And when they do find out, it's usually after a total loss, a fire, a major disaster, or something where fixing it simply isn't an option anymore. That's what I want to talk with you about. Here's the first major problem I see. It's very common to assume the value of your home and the cost to rebuild your home are basically the same thing. They're not. Sometimes they're the same, but sometimes they're not even close. Let me explain what I mean. I've had conversations with people who look at the market value of their home. They see that it's worth around, say, $700,000 and assume their dwelling coverage must be fine because the numbers look similar. And on the surface, that feels reasonable. But the question that actually matters is a different one. If your house were completely destroyed tomorrow, what would it cost to rebuild it from the ground up? That's what insurance calls replacement cost. And I like to think of it as rebuild cost because that's what's really happening here. Not what you could sell the house for, not what an app or website says, not what the land itself is worth, just the cost to reconstruct the structure. And this is an important distinction. In a lot of areas, the land itself makes up a large portion of the home's value. Location, neighborhood, and demand can push the market price much higher than what it would actually cost to rebuild the structure. So it's completely normal for your home to be worth more on the market than it would cost to rebuild after a loss. That's not a problem. The issue only comes when someone assumes those two numbers should always be the same without understanding what each one represents. Replacement cost or rebuild cost is focused on the structure itself, not the land it sits on. So when coverage is set using market value as the guide, people can end up underinsured without realizing it. Another issue I see all the time is relying on quick online estimates. Square footage times dollar amount, and you're done in 30 seconds, right? I understand why that feels reassuring. It feels objective. It feels precise. But here's the problem. Those tools make a lot of assumptions. They assume basic finishes, standard materials, average labor costs, and very little customization. Meanwhile, your home might have an upgraded kitchen, custom cabinetry, high ceilings, specialty windows, or architectural details that are expensive to recreate. I've reviewed policies where the estimate looked fine on paper, but wasn't really close in the real world. It was the same square footage, completely different rebuild cost. That's why relying on a calculator alone can give a false sense of security. Those estimates are a starting point, not the final answer. Another reason people end up underinsured is how quickly construction costs change. And this one sneaks up on you. Think about the last few years. Labor shortages, material spikes, supply chain disruptions. I've seen rebuild costs increase 30 to 50% in a relatively short period of time. But many policies are still based on numbers from years ago. Nothing changed on the policy, So it feels like nothing changed in reality. But rebuilding today costs far more than rebuilding even 5 years ago. That's why regular reviews matter, not because someone wants to sell you something, but because the cost to rebuild a home doesn't stand still. Sometimes people hear this and think, I'm fine. I have extended replacement coverage, 20% extra, 25%, sometimes even more. And that does help, but it isn't a guarantee. Here's why. If your base rebuild cost is wrong, adding a percentage on top of it doesn't fix the problem. I've seen total losses where the extended coverage kicked in and it still wasn't enough. The buffer was real. The starting number was insufficient. Extended coverage only works when the foundation is solid. Another common issue is that homes change over time. You remodel, you upgrade, you add features, new flooring, new kitchen, finished garage, covered patio, but the policy often stays exactly the same until something happens. And that's when it becomes clear the coverage never kept up with the house. Any major improvement should trigger a review with your agent. If your home would cost more to rebuild today than it did a few years ago, it almost certainly would. Your coverage should reflect that. New construction doesn't automatically solve this either. I hear this a lot. The builder said it cost $300,000 to build, but builder costs usually don't include post-build upgrades, design changes, or the reality of rebuilding after a disaster. Rebuilding is not the same as building new under ideal conditions. It assumes worst-case timing, labor shortages, and higher material costs. So, builder numbers and rebuild numbers are rarely the exact same thing. Another piece that often gets overlooked is building codes. If your home was built 20 or 30 years ago, rebuilding it today might require updated electrical, modern plumbing, energy efficiency standards, or even structural changes. Those upgrades cost money, and without the right coverage, those costs can fall directly on you. And that's why ordinance or law coverage matters. It's there to help bridge the gap between yesterday's standards and today's requirements. You might also be thinking, this probably won't happen to me. And I get it. No one wants to live in worst case scenarios. But every major claim I've seen starts the same way. I never thought this would happen. Insurance isn't really about probability. It's about impact, low probability, high consequence. That's what you're protecting against. So what should you actually do? First, ask how your rebuild cost was calculated. Not just what the number is, but how it was determined. If it can't be explained clearly, that's a good reason to slow down and ask more questions. Second, your dwelling limit isn't something you set once and forget. Homes change, costs change. Reviewing it every year or two is just being responsible. Third, anytime you remodel or upgrade, that's a moment to pause and ask, does my coverage still make sense? And finally, don't let a computer-generated estimate be the final word. It's a tool, not a verdict. Being underinsured usually isn't about negligence. It happens because everything feels fine until it isn't. My goal here isn't to scare you, it's to help you ask better questions so you can make good decisions. If this was helpful, consider subscribing. I break down insurance topics in plain English so you can understand what you're buying and why it matters. Thanks for spending a few minutes with me. I'll see you in the next one.